All right, good afternoon, everybody. Today's Wednesday, August 17th, 2011, and let's take a look at this market here. We had another kind of choppy session today. We were up 8 pennies in the S&P 500, and really we had a nice little bull market in the morning, and that was kind of tradable in there when we were above the VWAP right from the beginning. Had a nice push, followed by a light volume consolidation and another move higher. Tried to hold that VWAP, but then we turned into a little bear market as well. What I was talking about on Twitter this afternoon was this little inverted head and shoulders pattern on a 1 minute chart, and day trend, that is. Vic had said he's seen one on the 5 minute time frame as well. If you take a look at the 5 minute chart, you're going to see the same thing. I think that looking at it like this, kind of the same little thing. I was just looking maybe more at the leaves and not the tree, or certainly not the forest, but I was thinking that maybe this market could be able to push, because we're at pivot here too, up to the VWAP. And again, I talk all the time about when we have a declining volume weighted average price that the odds do not favor a long trade. Once in a while you take a trade like that, and they're generally not good trades, I think, to take when the volume weighted average price is declining, that we don't generally want to be looking for new long entries. The market continues to be a mess. We have this line, I guess I drew that in yesterday maybe, and it's still relevant here. This is this prior little level of resistance, and we've had a little bit of support. This is really the band of what should be the band of support, that is, on this on the SPY. Basically this gap area that we had ran into some resistance in there. And now yesterday we kind of got down towards that level. I was thinking today that if we got above these highs from Monday and Tuesday, then maybe we'd be able to push a little bit higher. But obviously the market just wasn't able to hold. It looked encouraging for a while, and you really just have to, you always have to have that flexibility in the market, that you can't just come in and say, well, hey, it looks like a bearish flag, therefore I'm going to get short. Or you can't say, hey, it looks like a failed bearish flag, I'm getting long here and I'm holding on, and I'm going to put my stop below yesterday's low or something like that. That's just a horrible risk reward. So it's really continues to be more of a sick patient here, and I feel and hear a lot of frustration from a lot of people in this market, and it's if you're feeling that way, trust me, you're not alone. I talk to a lot of very good traders who are frustrated in this market, and you could count myself included in that, just because we've had some really good action with the volatility, and this type of we have to remind ourselves that this is kind of to be expected, that we've got all this, still just all this nonsense in this market going on. And someone was saying, well, that I didn't trust the market. I said, I don't trust the markets. And was, well, at least something about at least you can trust a 2-year-old or something like that. And it seems like the market is being run by 2-year-olds, the way the decisions seem to get made in here. But I thought it was interesting today that we did hold up. We're holding above that prior resistance in here. We're still battling with the August 5th closing level, which I believe was 120.08. Off the top of my head, I'm not sure if that's what it was. But again, the August 5th close is a significant milestone, I think, more, as I said yesterday, psychologically, because that's where the market closed Friday before the U.S. debt was downgraded. So we're still kind of battling with that level, and to stay above that would send an interesting message that that the market was basically shrugging that off. One thing I thought was cool today too, well, not cool, but interesting, was if we take a look at the most recent leg lower and we draw a volume weighted average price in there, that's exactly where we are right now. So let's just take a look and we get that tool back here. So we're out about 120.88 or so is where it's currently at. if you think this market is just going to roll over and die and we're going to test the lows, you could make a very good case for that. I think it's very easy to make that case. But right now, the market is just kind of the last 3 days pretty neutral. We had one little pop outside of the main range we've been in for the week, but we're pretty neutral in here. We've got this rising 5-day moving average, and these things can and do fail miserably. So I think the 118-ish area, we get back below that level, I think we could expect another pretty rough sell-off likely. But there's so many people, and this is where it kind of messes with your head a little bit. There's so many people looking for the market to roll over that you think, well, maybe we could take, what's going to take the most people off guard in here, because that's what the market loves to do is take people off guard and leave them all chasing in one direction or the other. And I think what would take more people off guard would be a continuation of this recent strength and a move up towards the 20-day moving average or somewhere in there. We were talking about the retail holders, and the retailers have had a nice rally in here. They've got right up to this prior support, and they're coming into this range of what should be resistance between 102 and 104. We also spoke about the commercial real estate index, and I don't know why someone on Monday took my comments as it was time to sell this market short. But the point with the IYR is that we've been making these these higher highs and higher lows above a rising 5-day moving average, and you just don't want to sell short for more than maybe a day trade. Day trading short underneath the VWAP or something is one thing, but to position yourself, I don't think is the correct way. Now you can make the case certainly that we've run pretty far, pretty fast, uninterrupted. But I look at this IYR as, okay, we've had a real strong bounce in here, and it's kind of surprising that the commercial real estate is the market that's bounced the best really and held on to those gains. But I think we can take a look at this and say, well, if the commercial real estate is capable of a bounce like this, maybe this is foreshadowing something that's going to happen in the SPY. Now, the commercial real estate isn't generally a leading index or leading sector, but it can, when you see these pockets of strength in commercial real estate and retail stocks, you're going to say, well, maybe there's something there. What are the other big sectors doing? Semiconductors, again, these things have been a mess pretty much all year, and that breaking of the 32 level was the big, was where it really gave way. We could take a look there too at the, where the heck did that trend tool go? Let me figure out how to get that back. What I was going to take a look at was the volume weighted average price since that, there it is, since this last touch of the 50-day moving average, or since the first break of 32. So right in this range. And what does that mean? It means that there's that the sellers remain in control for now. If we take a look at the 30-minute time frame, you can see this, the 5-day moving average was just below, and actually that's still stuck on volume weighted average price, which is kind of interesting, because what I was trying to do was just draw a straight line across this prior level of resistance in here. The line would have been drawn the same, in other words, but this is actually a volume weighted average price line as well. So since this, this level's been established, that's the average price for this market. But we're trading in this little narrow band, 29 to 30. If we trade below that 29 level for more than about a half hour or so, I think that the semiconductors would probably go back down and test these lows and finish out this bearish looking flag. But if everyone's expecting that and somehow the market holds above that 29 level and recovers and then gets up through 30, we could get another another little round of short squeeze buying that gets this market back up into 31, 31 and a half-ish area. The financials are a big sector everyone's keeping an eye on, obviously, and we've had lighter volume here the last 4 days, but the market, it's holding on to the gains. I guess that's the bullish way of looking at it, the range has tightened in here, and that brings up the excuse me, the old phrase, you don't never sell short a dull market. Well, these financials are dull as can be. Basically, when you look at the daily chart, of course, you drill down here a little bit. There's a little bit more range, but that range is pretty tight. And this prior resistance at this $12.70 level, you take out that one late day close there. I forget which day that was, maybe last Tuesday or something. But we had this prior resistance in here, tested as support once, and now we're riding up along this rising 5-day moving average. Breaking the 5-day moving average I don't think is a horrible thing. But if we break the 5-day moving average, the 5-day moving average is flattening out, and then we come back up and test that 5-day moving average and then break 1270, then you know what? Then it's time to get into the Phasmobile. It's time to look at the short side of the market and get some exposure there. So there's just a lot of mixed signals in this market. Let's take a look at the Nasdaq because we haven't looked at that yet. The Nasdaq 100, the Qs that is, still battling with this prior support level, and it's not backing away. We're not looking at this and saying, hey, support broken acts as resistance. It tends to act as resistance, but there's a real strong battle, is the way I view it. There's a battle being fought in here, and who's ever going to take control here in the next day or two. Again, there's been this just choppy action really the last 2 days, and whoever takes control, I think we could get a pretty quick move in either direction. And right now, we've got this kind of the similar type of range in here as we just drew into to the financials. That basically here's our bigger area of what should be support. We had that one late day spike and then this resistance in here, but this band of prior resistance should be the support, and so far 53 seems to hold. Just below it we have about 52.5, so this is basically 52.5 to 53 is where the support should be found. We have to look at it and say, what is the market telling us? Well, we had a higher high today, but we also had a lower low. It tells me there's a whole bunch of indecision here, that nobody knows what's next, but whoever takes control in here, if somehow we get, I don't know what the catalyst would be, and maybe there's some good news out of some strange corner of the world that we weren't expecting, and it's usually some kind of unexpected news. But maybe this market can push beyond that 54.25-ish area, and if it were to do that, then what would be next? Well, we could go back and draw those Fibonacci's in and say, we're still having trouble with that 38.2% level. Could we make it up to the 55 level? Could we make it up to that declining 20-day moving average? The 20-day moving average is up near about that 55.5 level. So we've got 55.5, and we've got some Fibonacci in there. The point is, we have to remain flexible here. There's no roadmap right now. There's a whole bunch of indecision. It's easy to make a case that, hey, this is a bearish flag and we're going to fail and drop down. It's easy to make a case that no, this is going to, we had a washout, we had massive volume in these markets, and people are still trying to fight this, and they're going to get run over. The S&P is going back to that prior level of support at least. It's easy to make either one of those cases. The point is, because it's so easy to make the case in either direction right now, that we can't. We just have to wait for further evidence. That's it. You just have to listen to the message of the market. We had, look at the indecision based on the advanced decline line today. It was back and forth. Advancers ahead of decliners. Decliners, took control. And at the end of the day, we did have more advancing stocks than decliners. But it's just it's a messy market. It's difficult to read right here. clear what's going to be next. So we have to wait for further clues and listen to the message of the market, and it'll tell us. And we just, keep an eye on those key levels. Be ready to act, and be ready to be faked out as well. Be ready to take your losses in case it's a false move, because we're going to still see, it seems, this large volatility and a lot of indecision. Anyway, that will do it for today. Thank you for tuning in, everybody, and talk to you Friday. Thanks.